back to VCTV, the Venture Capital TV from LATOKEN. I'm the host and the moderator of the session. Myself, Sunny Mohanty. I'm the Regional Director of LATOKEN in Singapore. So today I'm very excited because I have a bigger panel today. That's sort of exciting to me. And the topics covered are BioTech, MedTech, and HealthTech around investments, around VC investments in general. Today we have 5 speakers, some new and some regular speaker. I would like to start introducing our speakers. Please, I'd like to pass the floor over to you to start introducing yourself, the short bio about yourself. Since I'm in Singapore and we have participants from India, so I'd like to start with India first. We have Samar, Ashwin, and Guhesh from Chandigarh and Bangalore. So I'll start with Samar, who is a first-time speaker at VCTV. Samar, over to you. Please start the short intro about yourself.
Hello, guys. Thanks for having me here. And so my name is Samar Singla, and I'm a full-time founder. I run 2 companies called Jungleworks and Jugnu. These are like on-demand platform companies in SaaS space. And we also invest from our company's balance sheet as angel investors. And in pretty much any, so we are very sector agnostic. So I hope to learn something new from all you guys.
Thank you, Samar. Thank you, Samar, and welcome to VCTV. You're gonna have fun. You're gonna enjoy it. So next, I'd like to move to our speaker who was here before and he joined us after a while, Ashwin. Hi, Ashwin. Welcome to VCTV. How are you doing since we spoke last?
Hey, doing extremely well. Of course, sitting in at home for a change these days, but good to be back, Sunny, and talking to you and your viewers. My name is Ashwin Raghuraman. I'm based in Bangalore, India, and I run an early stage venture capital fund that focuses on investing in deep tech startups that address global markets. So we are fairly sector agnostic, invest in all the sectors we are talking about today. Typically invest between pre-Series A rounds to Series B rounds, tend to lead the pre-Series A and Series A rounds and participate along with syndicates and Series B type of investment rounds.
Excellent. Excellent. Thank you and welcome again, Ashwin. So next speaker was just yesterday on my panel and we had a sort of one-on-one discussion and conversations around food tech is back here on the show because he wanted to have a debate with the fellow speakers. Guhesh, welcome back to VCTV. How are you today? How are you feeling today?
I'm fine, Sunny. Thank you for having me again. Just a quick introduction to myself. I run 2 companies. One is an incubator called Excubator, where we work with over 800 plus startups. And on the other side, I also run a small fund called C Fund, where we make early stage investments, not the kind of investments that Ashwin is talking about, but primarily the seed stage kind of investments that we make. Again, we are sector agnostic, mostly in technology spaces, more in business to business kind of companies is where we make investments.
Excellent, excellent. Thank you, Guhesh, and welcome back. So next from Asia, I'm going to move a little further west and touch Italy. We have Fabio, who has been a speaker before, and he's joining us from Italy today. Hi, Fabio. How are you?
I'm fine, and thanks for having me again. It's an honor and a pleasure to be on your show.
Yeah, so, just a short intro about yourself.
Absolutely. I'm an economist by training. I have a PhD in economics from the University of Chicago. And in my career, I worked for international institutions such as the International Monetary Fund, European Central Bank, and I moved to the private sector, Goldman Sachs in London. And then I moved to the Arabian Peninsula, worked in Qatar, United Arab Emirates, and in Oman. And now I'm a partner in an investment bank called Golden Eagle, New York and Dubai, with a little presence also in Hong Kong. And my main task is to bring innovative companies public on the over-the-counter market in New York, which is a regulated market, regulated by the Securities and Exchange Commission. and has a lower regulatory requirement. So it's ideally suited for companies that want to grow and want to expand their reach around the world.
Okay.
The best capital market in the world, which is the US capital.
Excellent, excellent. We're going to hear more from you on that. Thank you, Fabio, for that short bio. Last but not least, the new speaker who's just joined us for the first time from Finland is Thomas. Please introduce yourself.
Hi, thanks for taking me here as well. It's like a different audience I'm normally like used to speak to, but like it's a perfect place to be. My name is Thomas. I'm from a venture capital fund called InVenture. We've been running this fund for 13 years. We're investing from our third fund. We invest in seed and early stage. We are quite generalist, so sector agnostic in that sense, but there are certain themes that we follow, and health and MedTech is one of the topics that we have been focusing the past years. So portfolio of close to 70 companies and working actively with them in the Northern Europe mainly.
Excellent. Thank you, Thomas. So we are all set. We are all warmed up. We got introduced to each other. Great. So now we would like to know about some of the insights in the investment space. I would like to start with Samar because he's joined us for the first time. Samar, please tell us about your recent investments into HealthTech, BioTech, or MedTech.
So one of the companies which is in this space is actually called Fitso. So they started so we invested pre-COVID. So they started out as a company doing making people do fitness activities together. But actually, because of COVID, they pivoted to telemedicine and tele-diet consultation, pretty much like into all spheres of telemedicine. So now they are like more of a MedTech company from a fitness company. But I guess, so we are fairly sector agnostic. So we typically invest in early stage where a lot of companies actually pivot quite a bit. So from that perspective, our thesis right now, so we are looking into a few telemedicine companies at the moment because my company basically builds marketplace softwares. So anybody wants to start like any type of marketplace would be a potential customer. So that's the typical set of companies we like to see and keep exploring. So right now our focus is take like specialized telemedicine companies, which focus on a particular segment. And, I feel that this is telemedicine, obviously the most impacted and positively impacted area of the medicine and health tech side. So that's where we are looking to invest in. So mostly, looking at companies which operate in Africa, South America, Southeast Asia. So the developing markets, basically. So, yeah.
Oh, that's very good to know because it's very much essential for our founders to know which regions you are focusing on. So you're focusing on Southeast Asia, Africa, and Latin America.
That's right. So essentially, developing markets, we feel that, in developed markets, our ticket size is around 50,000 to 100,000 USD at angel stage. And this kind of money doesn't really go very far when you talk about like Silicon Valley companies or, European companies. We don't mind investing into these places, but that's generally as part of a syndicate. But developing economy is really the key thrust area for us. And some of these companies are in a developing economy, but they build a product for the world, which is okay. So essentially that's really a theme here that we do.
So which means that you obviously have partners in these countries.
Yeah, so we have so in fact our legal entity is based out of US and US, Singapore, UK, Canada, pretty much like every place. So So we just invest from our balance sheet. So it's fairly easy for us to just invest from the nearest geography. We're not like a very managed fund per se. So we just invest from our balance sheet, and it's been going pretty well so far. So we have had a few successes. So so maybe we'll formalize it in the coming years.
Oh, good to know that, because we have started small these geographies that you just mentioned in our community. So it's very much it's key for them to understand that which geographies you cover, like you said, like
Sure.
developing countries, and we have them on our community as well. And yeah, thank you for that. Thank you for that, Samar. I'll come back to you with more questions. Next, I have Ashwin. Hi, Ashwin. Welcome back. And again, the same question. Since last time we spoke, what has changed? What are your recent investments?
Yeah, I think it's been a very short time since we actually spoke in terms of actually getting done with investments. But just to give you a sense of who we are invested in from the healthcare space, we have a biotech company in the immuno-oncology space, Boston HQ'd, but with all their labs in Bangalore, and most of their team is based out of Bangalore. And they have a drug candidate for prostate cancer, which is an immuno-oncology drug candidate. And this is a company called Zumator. They have a couple of platform technologies, one of which is an antibody library platform. And the word antibody has become a little bit more commonplace these days, thanks to COVID. A few more people understand them. We invested back in November of last year, when I think the general population was not quite familiar with that term, right? So it's a little easier to explain what they do. They have a very, very large synthetic antibody library, and they're using or selecting antibodies from that to take through the clinical trial process and even the preclinical process to arrive at a drug. And the first indication is prostate cancer. We are looking very closely at two other companies which are in the MedTech space. One has got a little bit of, let me say, is a device for remote monitoring of the heart, and to be able to arrive at ECG signals. It's a portable device.
How is that possible?
Sorry?
I mean, I'm wondering, when you said it's a remote ECG, how is that possible? Because
it's a small device that is almost like a keychain form factor, and then you have to touch it on various parts of your torso, as well as you use your thumbs. And so they've come out with some fairly good electronics and software that drives it to actually arrive at what is the equivalent of a gold standard, which is something called a 12-channel ECG device. So your waveforms are pretty much as good or comparable with large equipments in hospitals. So there's somebody that we're putting through the evaluation process as we speak. The second one that we're looking at, which seems very interesting, again, from a product standpoint, very early in terms of go-to-market yet, but is a company that is using AI on multiple physiological parameters to arrive at a diagnosis for mental health. And mental health, prior to this, epilepsy and anxiety and depression have been hard to diagnose. And you have various more like survey-based mechanisms that are used in order to diagnose things like anxiety and depression. And they're arriving at an AI-based product to be able to do that, which is again a wearable type of device. So these are in the works still, and we're sort of putting them through our diligence lens as we speak.
Wow, I'm really fascinated by the areas you're covering. Anxiety and depression, how do you measure them? It's very difficult to tell if I'm anxious or I'm depressed. I myself don't know. I mean, I read a lot of articles, but for a common person, somebody is going through a depression or they're, it's very hard to say unless there are some obvious symptoms in the body, right? But this is a good one.
True.
Something like that you can wear and all the signals.
Yeah, you actually capture multiple signals so that you get it accurate. And the one that has been tried so far is brainwaves. In some parts of the world, it's harder because there's a lot of noise in those signals. But these guys are trying to use a few other signals, which include your heart rate and EMG type signals, which come at the skin level, to be able to put them all together and then arrive at an accurate diagnosis.
Wow. So did you say you are focused on early stage or growth stage startups?
Yeah, we not growth stage, but anything from pre-series A to series B is how we would like to talk about it. So we do invest in pre-revenue startups, but those that have some element of validation. So in a very healthcare MedTech type startup, the validation would be product validation, or it could be early market traction. But on other areas, example SaaS, and we do a lot of B2B. It would be validation through early customer acquisition, at least, where we would want to see some product market fit. We do invest in companies that have also started building revenues and repeatable revenues, and those are more of our Series B type investments.
Okay, Series B would be the ticket sizes would range from.
Yes, I mean they could go up as high as $10 million, but we would not do the entire amount. We typically invest in the range from around 500K USD all the way to 3 million first check.
Got
and
it.
then follow it up with additional capital if the company were to require that.
Okay, did you just mention that you are technology agnostic?
We are deep tech focused, sector agnostic, but we look at a very, very high level of technology. So anything that is almost IPable, areas like AI, which are emerging tech areas as applied to multiple sectors. We have something in the tech space, which is based on AR, VR. So we're looking at emerging technologies where tech itself serves as a moat and a barrier to entry. And those are the type of startups we want to see.
Deep tech, does deep tech includes blockchain?
Also, yes, but we've been a little wary. We've been keeping a watch on the blockchain sector. I know you folks work very closely with blockchain startups. We haven't pulled the trigger yet on this one. It's let me put it this way. We're studying the space as we speak.
Okay, sure. Good to know that. Thank you. Thank you so much, Ashwin. Okay, next I would like to move to Guhesh as well. We spoke about food tech and I got a lot of knowledge from him. Today we're going to be talking about biotech, medtech, and so please Guhesh, please share your insights about these fields, HealthTech,
right.
medtech, biotech.
So let me give you an idea in terms of what's the kind of investment that we have made. We made an investment in a company called BestDoc, which is an intelligent patient relationship management system deployed across India at this point in time. They work in close to about 100 plus hospitals in India, manage over 2,000 doctors, and roughly about so far, I think in the last year itself, I think we have managed close to about 3.5 million patient visits that have been managed by this entire system, right? In terms of some of the things that the product that this company has done right now, some of this thing has actually happened because of COVID, where companies are turning around, or the hospitals are actually turning around and saying that, look, we need to start managing inbound patients much better, right? And that's the reason why BestDoc has really jumped the gun in terms of being able to provide great contactless patient management systems, including scheduling, including appointment registration, all that kind of stuff that typically happens over there. Kiosks that take care of many of the the interactions that need to happen at the hospital. Those are some of the things that's there. Happy to announce that BestDoc at this point in time is actually looking or has a term sheet from one of the larger funds over here to raise a Series A. So that's where we are as far as the health tech system is concerned. That's from C Fund. From Excubator, we worked with multiple, as I mentioned earlier. We at Excubator, we look to connect really good startups with great quality enterprises, right? I mean, that's one of the things that we have done, and also connect these startups that are actually showing traction with investors. That's the other piece that we do. So we have worked with startups that have done things in the area of, say, for example, imaging-based breast cancer detection rather than intrusive detection mechanisms. There's a company called Neramai, which is there in India, which I think everybody knows about. At least the folks in India would know about Neramai Health Technologies. We have worked with a bunch of other startups, primarily connecting them to organizations such as Novartis, companies such as Biocon. These are some of the companies that we have connected these people to. We are at this point in time, we are watching these startups to see what's the kind of traction that they show before we start making investments in them.
Right. So if I understand correctly, you invest as well as you connect these startups to enterprises.
That's correct. So the first thing that we do is we look at great quality startups and then we try and do a customer diligence on them, right? Just that we put them in front of the customers that we work with, Excubator. We look at what's the kind of traction that they're showing over there, and then that gives us a phenomenal insight into the ability to write the first check as far as some of these startups are concerned.
That's a very good model, I would say. Thank you so much.
My pleasure.
Thomas, over to you, please. What are the recent investments that you've made in the space? Because you had a lot to share.
Yeah, so two companies we have done quite recently. Both are actually like working with the fertility. So the other one actually, the female fertility, the other one is the male fertility. So like the female fertility is a company called Curasense. It's a Denmark, Bay Area based company. So quite advanced on technology. So they have, what they are doing actually taking the menstrual from the blood sample from the menstrual blood. So like that's kind of natural way to collect the samples. They have their own method how to actually collect it. So they have the sanitary pad. You send it that to be diagnosed in the laboratory, and you get different biomarkers from that one. And they all will be delivered through a mobile app to the females, and they can then monitor and of course see the results. And so it's a preventive and quite advanced way how to monitor yourself and like focus on the different clinical disease and the fertility on that side. The other one is a company called Mojo. It's a Sweden, France-based company. They have totally different approach. Then it's a male fertility, how they do it. So they have like an intelligent microscope, very advanced AI, actually like analyzing the sample, and then of course making like advanced guesses what could be actually improving the treatment, or like what could be like a more targeted medicine on the male side. So those are both quite early stage, so seed stage companies, but quite initial traction is very promising on the scientific side, and both are going to market at the moment. So on the ticket size, what we have done, so like we do tickets between 500,000 to 2.5 million euro initial tickets, and of course willing to invest more if needed on the cases as well, just to follow and build syndicates to support the companies.
So these were what your recent investments made in the last 6 months?
Yeah, those are done like the past 12 months on that one. Then we are just actually like working on one company which is on the diabetes side. Glucose monitoring, a new method, novel way to do that one, non-invasive way. Not the easiest one. There have been a number of attempts how to solve that issue, but we believe that this company has the edge to do it.
And the regions that you cover is Europe and US?
Yeah, Europe and US. Focuses in Northern Europe, but we are doing investments in both in Europe and US.
Okay, great. Fantastic. Thanks. I mean, that's something, fertility, that's a very new area that I got enlightened on. Thank you so much, Thomas, for that. Okay, sorry, Fabio, over to you. Sorry, please share the recent most investment that you made during the COVID-19 time.
Specifically, we're looking at a series of investments that have to do with sanitation of hospitals and other areas. For example, there is a company in Italy which has a patented system for a very effective disinfectant for hospitals. Then we have another company that is killing bacteria when using nitrogen to clean up food and to store food. So I mean, apart from the vaccine, which is obviously, an area where the big guys are playing, there is a whole lot of ancillary sectors where one can look at. For example, I don't know, to inoculate the vaccine, maybe it would make sense to change the syringe technology. There are already companies that have made advances in this area with syringes that can inject vaccines, not the needleless technology. So if you need to vaccinate thousands of people a day, or hundreds of thousands of people a day, where do you put all the syringes? If you have something that can, a device that can do it for thousands of people without generating wastes, that could be, that would make sense. I'm just giving you, like a very specific example. But in general, when we look at investments, we have also, in addition to advising companies on IPOs, we also have a fund which we call Industry 4.0, where we invest in companies that are already listed or about to be listed. And what we essentially ask three sets of questions. Is the sector where this company operates growing, remaining pretty much the same, or shrinking? Then we ask, will this company be able to capture a larger share of this market? Obviously, if it's a large share of a growing market, that's the ideal situation. But it could be a larger share of a stagnant market, which is also good, or can be effective in enlarging its market share even in a sector which is shrinking. And if one of these two conditions apply, then we ask, how will this company protect its market share? Does it have some device, patent, methodology that is unique, that is not replicable? Or does it have superior marketing abilities, or an incredible portfolio of clients, all of which are growing, companies with strong cash flow, and so on and so forth. So when we conduct this analysis and we're satisfied with the results of what we see, in other words, a growing share of...
So where is this fund based out of? Sorry to interrupt you. I'm just a little intrigued. Where is this fund based out of? Is it based out of Europe?
It's based out of New York, but we invest everywhere. I mean, it's we're fairly sector agnostic. We have a preference for BioTech and MedTech, but in terms of geographies, we don't...
Cover the globe.
Let's say, yeah, it's global. We don't have, we judge on the merit, not on the geography.
But are these startups or these are established companies?
The fund invests in, because regulatory requirements, can invest only in listed companies or in companies that are about to list. So we participate in IPOs, some of which we also advise.
All right.
In general, it's not a fund that can hold illiquid stakes in companies that are not listed. In other words.
Okay, so you don't, you actually don't. I mean, do you also work with founders and startups?
We do. I personally, I'm quite active in MEDA Angels, so out of Washington, D.C., which is an angel group formed by doctors, PhDs, researchers, mostly based in the US. But we assist companies from all over the world, Korea, Europe, Middle East, possibly.
Right.
And these, sometimes we do invest, like we act as advisors for fundraising, but also as early investors, as seed investors. So the members of Meta Angels do finance, do provide seed money for early stage startups.
Yeah. Thank you, Fabio. Thank you for that, because it's very key, because the kind of people we have, the kind of companies we have with us are mostly startups. So that's very, that's
They
very key.
can contact me and I will definitely put them in touch with the right segment of the investment community.
Okay, thank you so much. Thank you so much, Fabio. And okay, so we've done with the first question. I would like to ask the second question, because we have all the investors over here. So comparing to 2020, what has changed in terms of VC money, like, you know, the investment strategy, including the risk involved because of the pandemic? Obviously, the investments would have got affected when the pandemic started in March, I think February, March. But things have gradually changed. That's what I hear from the speakers here. They gradually change. So in terms of investment, I mean, what has changed since last year to 2020? I would like to start with Samar.
So see, obviously, COVID is one of the biggest, I would say, change in the whole world, that has happened. So a lot of things have been driven by COVID, right? And from our thesis, what we are seeing is, even though vaccines and medicines, they are a pretty pretty hot area again, from what I hear. But to be honest, we don't participate in that space. So in the space that we see, I see a lot of specialist telemedicine players, right? Somebody's focusing just on transcription. Somebody's just focusing on medical records. Somebody's just, so essentially, there is, so if you look at the telemedicine industry, right? I mean, it has always had that one was legal, acceptability, right? Who gets the liability and all those things. So those have actually been fast-tracked because of COVID. And because of that, a lot of these companies which were like looking at years to go to market are now able to, start operations almost right away. And because of that, now they are actually going to market. They're actually having instant consultations. But the bigger challenge for these guys is to see that most of patients don't have their records digitized, right? Or if they have them digitally available, they are not available on the platform. So I think so all those and how do you kind of get testing done online? So some things can be done video is one part of it, right? Scheduling is one part of it. But there are so many small areas around telemedicine. And I think that's the biggest change as far as we see, because we are fairly software focused company. And that's what we are, looking at. So it's all pretty much COVID driven, to be honest. And yeah.
So the investments have remained steady. They've gone up, gone down. I mean, what do you see? What's happening with the?
So in our view, and I think that there are and I think this is probably a market sentiment. So companies that were burning cash for market share, so all these on-demand Uber kind of companies, like food delivery companies, they are not really in favor anymore. Because today, focus has gone back to basics, right? I mean, people don't want to eat something because it's 1 + 1 free, right? As 6 months ago. right? Today, people will still focus more on a fundamental need basis, like same with rides, right? I mean, so I think things have become much more utilitarian, which means that companies have to look at their unit economics. I think earlier the thesis was that okay, focus on scale, unit economics will come, and I think that has changed quite a lot to focus on unit economics first, and scale will come, right? If your product is differentiated and stuff like that. So I think that's the biggest difference in the mindset. I mean, investments are happening. I don't think that's changed. And to be honest, a lot of investments are happening which are not even like supposedly hot areas. Like even travel is seeing some deals, because people do understand that not only travel not only will travel reduce, but travel will also change. Like there are these this interesting company I looked at which is doing like a disinfection kind of tunnel for airports, right?
Wow.
And yeah, I mean, like a UV plus kind of spray, and I mean it's a decent, and they look at your temperature, and they look at they look at you through an infrared camera, and kind of tell at the end of that tunnel. So you just pass through that tunnel, and you'll probably, if you have temperature, they'll just tell you that you're not fit to go in the airport, because right now there's a person standing with a thermometer, and it kind of doesn't make sense. So these kind of companies are I think pretty like transient, in my opinion, to be honest. I don't hope that it becomes like the norm. Like for years we have to pass through disinfection tunnels to kind of catch a flight and stuff. But yeah, I mean, there are a lot of these companies coming in. So we are staying away from anything. So our thesis is that, like stay away from anything that is COVID specific, because there are a lot of companies out in the market which are like purely COVID specific products, right? And I feel that, I mean, probably it's a 2-year phenomena, but not more than that. So
So your volume has reduced a bit.
Hi, sorry, is it okay now?
Yeah, it's okay now. Yeah.
Yeah, I think I covered it, the microphone with my hand. Sorry. So basically, I think, so for us, the biggest change which in the area has been telemedicine, which has kind of gotten accepted instantly. And because that space was not ready, because people were not expecting to be operational so soon, there is a lot of these small niche things around that telemedicine industry which we are looking at. So that's
because you spoke about telemedicine, we have got a startup in our portfolio who's based, their telemedicine product is based on blockchain technology.
So what's the
So I'm asking, my next question is, as an investor, I mean, obviously you understand the technology as well. How would you differentiate this startup from others who are non-blockchain, or does that matter, or that doesn't actually get
sure.
into context?
So see, I mean, I'm a believer in blockchain, to be honest. I hold. So personally speaking, I hold most of my wealth in Bitcoin, which is a lot of people tell me that I'm stupid.
No,
yeah.
you're not.
So apart from like all the standard stuff like cars, home, and that kind of stuff, pretty much everything I hold is in Bitcoin, and so I'm a believer that way. But at the same time, I think that blockchain for blockchain's sake is not really what I believe in, right? I mean, blockchain has a lot of potential, but it has to be apt for the space. Like for example, like there is this blockchain based X, Y, and Z kind of doesn't make sense. I mean, I don't understand why telemedicine would benefit from blockchain on the surface of it, right? But I mean, if somebody could give me a good use case.
Are you open to talk to this startup? Are you open to talk to this?
Sure, I'm happy to. I'm happy to discuss. But yeah, I mean, see, my thesis on blockchain is that I think it's a great technology. It's definitely, I mean, Bitcoin has definitely been my choice of source of, let's say, store of capital, store of value,
Okay.
so to speak, right? But I think beyond that, blockchain for blockchain's sake does not really make sense to me.
Right. But I can obviously, just please feel free to the founders after. I'm going to connect you after this session, and
Sure.
probably they have a better answer, because I
No,
just know.
definitely, I'm happy to talk to them and see what I mean. Any companies in the space of telemedicine, I mean, we are very bullish on it. We're happy to talk. And as I mentioned, ticket sizes are 50 to 100,000, angel stage, round. So fairly sector agnostic, mostly focused on team quality and stuff.
Right. And I never thought you're going to be investing Bitcoin, but please do believe in Bitcoin. I'm telling you, it's going to skyrocket for sure. That's what the analysts.
I don't care, to be honest. I think if I just don't want it to fall a lot, because dollar is doing all the falling anyway.
Exactly.
So you don't need to do much anytime. I think there is rather two people who are happily sitting in euros. So I think Indian rupee is kind of, anyway going to follow dollars. So.
Right. Thank you so much. I'm really good to know, and surprised in a very good way that you hold Bitcoins. Thank you so much. Ashwin.
In fact, I started, fun fact is that I started the first Bitcoin exchange in India. And even before Zeppay, UnoCoin, much before those guys, about 8 years ago. And Bitcoin was pretty new then, right? I mean, the Bitcoin price at that point was about $100. So you can calculate what time it was. And then we got an notice from RBI that it's not allowed and all that stuff. So I shut it down. I'm a believer, but what can I do? If a state says you can't do it, then we won't really fight with them. So.
But now, I think RBI has the courts have lifted the ban, right, in India.
It's still, a bit debatable, because they're saying that you can, probably you can trade Bitcoin but not hold Bitcoin. So it's a bit dicey.
The gray area then. Okay, we'll talk about it more. Over to
Sure.
Ashwin.
Yeah, sorry, what's the question?
So investments, in terms of VC investments, what has changed in 2020? Because nobody knows. This is a very unprecedented time that we're living in. We keep on saying that because we don't know what's happening in the next 6 months as well. So what has changed in terms of investments? And also, please let's touch base on blockchain if you see any startups in that space as well. Thank you.
Sure. So let me answer your question in two parts, right? Okay. Right at the start of lockdowns and when sort of COVID hit us, I think most funds, including ourselves, went into a little bit of a defense mode, saying, how do we protect the portfolio that we have? And how do we ensure that they are safe? How do we ensure that they have adequate runway? So we went into a little bit of a survival or a defense mode to start. But that didn't last long, to be honest, not just with us, but with most of the funds that we've seen in our ecosystem. And we're big co-investors. So we are pretty much in touch with most of, a lot of the big funds, at least the ones that are based in India. And so that I find is that investment and deals have kicked off. Deals are starting to happen or have started in the last 2-3 months, pretty much at the same pace as it always was. And so I see the bounce back in terms of investments, at least at the early stage, happening, has happened pretty rapidly. Mm-hmm. On the other side, right, which is really on our portfolio side, as well as on new opportunities, let me just say that companies in my portfolio, some of them have looked at use cases which have suddenly got thrown up in an opportunistic manner. Mm-hmm. We are predominantly B2B, and so consumer markets drive the customers of my portfolio. And to that extent, we've seen areas like online education kick off. And a startup of mine that was addressing, for example, with a product, very innovative product, the whole space of, or the media sector, they have a product that gauges the emotional response of anybody who comes on a video, or to a video rather. And they decided that, listen, here's online education kicking off. A lot of content is getting delivered or distributed online, and how do you measure a user's emotional and attentive response to online video, educational video content. And so they have, I won't say pivoted, but they've added a set of online educational companies to their portfolio after having built their product or adjusted, let me say, their product to address this market. And so you have 3 or 4 companies that I know in my portfolio, at least, who've added on or tried to seize opportunities because something has presented itself. In terms of new opportunities, I certainly think that a lot of our new opportunities or new areas have emerged in healthcare. I tend to agree with Samar that what I would call teleconsultation has really kicked off in a big way. This is an area perhaps in India that kicked off 2 or 3 years back. 2016 is when we saw the advent of first set of startups that got funding, but they've got a tailwind as a result of COVID. And that's why what we are saying is perhaps we look at innovative products that will accelerate the adoption of teleconsultation, which could be a diagnostic product which gets into the home, pretty much like you have a glucometer sitting at home or a thermometer sitting at home. Can you measure other parameters at home? Or this guy who's coming and taking your blood sample at home, can he also conduct other tests which you would not otherwise? And ECG was one example that I gave you earlier, but it could be others as well, right? So I do think that there are a set of new opportunities opening up, especially in healthcare, but even other areas. Our sort of approach is to, as a fund, is to really try to figure out which of these has a certain level of permanence, because a lot of these could be really fads or more temporary. And we have understood over time that customers are resilient, which means they get pushed away from the normal. But at the end of the day, it doesn't take a lot for them to just bounce back to normal, right? And we are in it for the long term, right? As early stage venture capital investors, these are not public markets which we're investing in. And as a result, we need to see what permanent trends are going to change as a result of COVID. What is going to have a little bit more of a longer term effect. And that's where we're trying to figure out whether there are new opportunities emerging which could play out over the next 5-6 years because of this. And I think there are 2 or 3 areas. I certainly think teleconsultation and associated areas is going to be one. Online education is clearly, or the shift to online in a bigger way is definitely going to happen, and how that impacts a larger audience is something that we're going to see. So there are going to be a few like these that we will identify and then try to find exciting opportunities around.
Okay, great. What about technology when it comes to blockchain?
So blockchain, see, very interestingly, there's something, in the healthcare space, this could become very relevant, right? And we've started seeing some opportunities. Let me put it this way. Blockchain, like any other technology, AI is something that we've invested in. Blockchain, we haven't yet, but we view it with the same lens, which is that, is this technology going to solve a problem which was so complex it couldn't be solved well before? Or is it going to solve a problem more efficiently than it was going to be solved before? And that's the lens with which we viewed AI. And that's the same lens with which we're viewing blockchain, right? And so when we've been looking around, there's one big problem in the healthcare space in India that we are seeing, which is we seem like a very large market. Our population is perhaps the largest or the second largest in the world, right? And as a result, it's not just the population, but it's also the, let me put it this way, the sick population, right? Or the disease population. We have the highest cases of diabetes in the world, one of the largest in terms of cardiovascular disease, highest growth in cancer rates. And all of this is also a function of the size of the population. So it should translate in a very, if we look at it very mercenary way, into a large market opportunity for anybody who's addressing these areas. But that hasn't happened largely because it's much harder to access this population, pretty much as it's equally hard for this population to access quality healthcare services, right? And so innovators who are building technology and products to address these healthcare markets are finding it hard to access them. We think there's a role to play for blockchain, especially in healthcare, simply because it is a multi-stakeholder environment, very unlike many other sectors. And let me explain that. Your customer, very often the guy who's making a purchase decision is a doctor, but he's making it on behalf of a patient who's the one who's really triggered that decision. And neither of them are actually paying for it. It's an insurer who's paying for it, right? And then you have a set of guys, maybe the doctor is part of a hospital, which is the service delivery guy. And then you have a fifth person in the ecosystem, which is in any ecosystem, which is the regulator or government, right? And so it's a, there's so many people involved in, actually driving this ecosystem or the dynamics. And I think blockchain is especially relevant in such scenarios where there are multiple stakeholders that are involved. So I see a lot of scope for blockchain in healthcare. And there is one other aspect so there was recently in India, the government announced something called the National Digital Health Mission, right? Which is how do we improve the whole, digital, access to patients through digital formats. And I think one of the key questions that has always been raised in healthcare is related to privacy and data privacy, especially patient data on health, medical health, and health records, and so on. And I think blockchain can really play a huge, huge role in solving this piece. We are seeing a couple of startups already trying to work with this mission to be able to develop this. There's in fact been a sandbox challenge put out by the Ministry of Health to invite applicants to say, help us create something. And I was on the jury of one of those selection, sort of sessions that they had. But I think it's exciting. It's an unsolved problem. And I think blockchain will have a role to play for sure.
Okay, thank you, Ashwin, because you have rightly touched on the pain points that blockchain technology can resolve, because I have seen other markets, other mature market adopting the technology to solve those problems. So thank you for sharing those insights. We would like to now move to Guhesh. Please share your insights about, we spoke about it, but for this session, we'd like to know your insights as well. What has changed in terms of investments for this year? You're on mute. You're on mute.
Yeah, thank you so much. So I would completely agree with what Samar and partially agree with what Ashwin has been talking about. Samar, I really like the point that you made that said that, blockchain for blockchain's sake does not make sense. That's something which I truly appreciate, something which is there. Ashwin, the piece, I more or less agree with what Ashwin has been talking about. The only point that I think, I would probably add to what he's talking about is the fact that early stage investments have slowed down in India. Okay, late stage investments are happening, but early stage investments in terms of, whereas there was a system where pre-revenue companies could potentially raise money, I think that's slowed down significantly at this point in time. I would love to hear, what Fabio and Thomas have to say about this kind of a scenario. Is it something which is global, or is it something which we are seeing only in India? That's something that I would love to hear from Fabio and Thomas.
Right. So early stage investments have slowed down and growth stage investments have gone up. Okay. Thank you so much for that. Those insights, Guhesh. Thomas, what do you think? What has changed in investments in Europe and US after COVID?
Yeah, I agree what was said earlier, especially with Ashwin, what he was actually taking quite of my notes. So seems that we are with similar stage as an investor and similar approach to quite a few aspects. So of course everything has slowed down during the springtime. What was impossible to see where the world is going to turn and how it's going to be the new normal. But in the past 2-3 weeks, it has really picked up after this, the holiday season here in this region. So actually people are somehow more confident of starting to do new investments, and even on the earlier stage as well. Of course, I said earlier, so the big trend is actually most of the money will be allocated to fewer cases but more larger amounts. And now we have seen in last days, let's say that the activity is back there. So there are new deals announced, and new companies actually raising money also in this region.
Wow, that's not Northern
That,
Europe.
that's a positive thing. Actually, on the blockchain thing that you were asking, so like one thing actually, like I've been thinking myself, and like we are not only MedTech investor or like a HealthTech investor. So the cloud computing, which will be all over the healthcare as well, and of course that like brings some challenges. Well, if you think about taking all the health records and sensitive information to public cloud. So there are certain regulations, and you have to be HIPAA compliant to be able to just to support that one. So that's something that personally I would like to get more involved with and understanding, so that the combination of the hybrid model, that you have the public cloud and then you have the private cloud, the on-premise different solutions, and the hosted version. So like actually which part of the healthcare will be transferred to cloud, and when people are willing to do that one. That has a huge effect on the data gathering, that has huge effect on the AI applications. So first of all, as you know, I all know, like you have to have the data first to be able to turn and to train the AI, the machine learning algorithms for that one, and where you host it, where you actually run the show, where are you having them on premise, or are you having it in the public cloud? So, and I think that's going to change quite a lot when like think about remote diagnostics and like where you actually do the diagnostics or the treatments, and where you actually then transfer it, and who will be actually having access. Is it the patient? Is it the healthcare professionals? Is it a combination? So that's going to be quite a huge opportunity for the startups on a more generic, not only health related, but overall like data players in this field.
Yeah, agree. The cloud providers, for as you rightly mentioned, they have a good opportunity to tap into this space, because
Yeah.
public cloud, I think it is on the cloud publicly, it's hosted for various hospitals, and the services, I think the services go down as opposed to a private cloud. That's what, if I understand correctly, I think, yeah, I mean, a lot of potential in that, the startups in that area to tap into that market. Yeah, sure, agree.
Exactly.
Thank you, Thomas, for that. Fabio, what have you seen? Like, okay, let's talk about blockchain. I mean, have you seen many startups in Europe, in US, that you've come across that adopted blockchain technology to transform the healthcare industry?
No, honestly, I haven't seen much.
Okay. So no worries. Please talk about generally the investments.
You see, the blockchain for a few years has undergone a hype. So everybody was somehow linking its initiative, its startup, its project to blockchain. I've seen things that were completely bogus, but attracted some attention because the word blockchain was inserted more or less spuriously in the description. Now, in the healthcare sector, probably blockchain would be very useful in the record keeping. For example, if you had like a social security number, you would have a health security number linked to a blockchain system. Throughout your life, you could see what kind of vaccination, treatment, surgery you've undergone. And so you have all your medical records accessible to doctors or insurance companies or whoever. Obviously, there would be problems of privacy, but that's an area where I see some application. Problem is that the healthcare sector, in many instances, is dominated by the government. So it's the, whether you will be successful or not, it will be determined by a government decision, a public policy strategy. And for this reason, I think as of now, the adoption of blockchain in the healthcare has been quite sluggish, and to my knowledge, hasn't made much indent. Things could change. Certainly, we've seen that COVID deaths were linked to pre-existing conditions. So there is an awareness now that in order to treat illness, you have to have a holistic approach, and such holistic approach must be based on a record keeping of all past ailments patient has gone through.
Yeah.
So these are my that's my take on the topic.
Sure.
For
You
what
have
concerns the changes that the VC space has witnessed in after the pandemics, I would say that there is the main trend that I detected is the pressing need for many companies to raise cash because they've been burning cash. And since there is a credit crunch, banks are reluctant to finance new initiatives. Investors are keeping rather prudent attitude. The main effects are on the demand side rather than on the supply side, which in my view has remained fairly resilient. So there are people who are willing to invest. The financial markets in general have withstood the effects of the pandemics and the ensuing recession quite well. So there hasn't been a panic in financial markets, and even the riskier parts of the financial markets have remained resilient, in particular VC and in general private equities.
Okay, great. Thank you for those insights. Any last question from any one of the speakers today to the co-speakers?
If I may jump in, I would like to have a feel, like for especially from from those who invest in early stage companies, whether the risk attitude, the risk tolerance has increased, decreased, remained the same, and if the choice of projects has undergone some changes in terms, for example, of size, in terms of time of years projected until the break-even, and especially, what about exit strategies? What do you see in terms of exit strategy? Do you think they will be more challenging, less challenging?
Who would like to take this?
Maybe I can start with this. Sunny, I need to leave immediately after this, but
Okay.
Thank you so much for having me. My impression is that the risk appetite has dropped, especially when it comes to early stage companies, at least as far as the kind of companies that we are seeing right now, which essentially means that companies need to be a lot stronger to be able to attract investments as compared to pre-COVID. We have seen companies that are beginning to show significant traction at this point in time in terms of revenues are the ones that are still being viewed by funds as potentially good investments. That's something that's very clearly there, and that appetite, I think, will probably get a little less in terms of VC funds, primarily because exactly the point that you were talking about, the amount of time that companies will probably take right now to be able to hit break even, and then therefore need the next level of funding to be able to scale up further. I think that time period is anticipated to increase, right? which essentially means that a company that was doing really well maybe last year, at this point in time, they have slowed down in terms of growth. No one's really growing at this point in time. And most people think, I mean, we personally think that it's going to take at least another 12 months before companies start showing some levels of growth. At this point in time, they have decreased, and that reduction is quite significant in many of the cases. Once the V curve or whatever starts, we only hope that it's not a W. Once a V starts, at that point in time, we anticipate that the drop in the V is probably, or the increase is going to start about 12 months down the line. And that's when I think people will start looking at potential exit strategies in terms of time to take a company to an acquisition, or time to take a company to, forget IPO, time to take a company to, say, a merger with another large organization. I think that's going to take a longer time. However, there are these, deals which are happening right now where very opportunistic acquisitions are happening in, many parts of the world, which is something that we have experienced. Companies that have not been able to, scale significantly, and where they want to make some kind of an exit, at least return some money back to their original investors, are literally getting acquired at, maybe at the same levels of money that investors have pumped into the company itself. Forget valuations. That's something which I anticipate will probably increase over the next 12 months.
Right, great. Thank you.
So let me take a, sorry.
Sorry, I have to leave for this one. Sorry.
So those who are leaving, before you leave, sorry, can you just give me a feedback about what you like about VCTV, or what you didn't like? I mean,
it was interesting concept. I really like actually like having different perspectives and like a totally different geographical regions joining this one. So I like the approach is like eye-opening in that sense. Of course, that people are struggling with the same issues globally, and like that's what I like. So it's great that you took me here, and also happy to be involved in the future as well.
Of course, Thomas. We'll love to have you. Thank you. Thank you for joining us.
Okay, bye.
Thank you, Thomas. Bye.
Bye, Thomas.
I really like the approach. I love meeting. I mean, Ashwin and I have known each other before. Summer, it was a pleasure meeting you. And yes, Fabio and Thomas, it was great meeting the two of you. I really like this kind of a discussion. It was a lot better than yesterday. Let's put it this way, where only you and I were talking. So this time, at least we have had some decent conversation with multiple people. So thank you so much for having me. I need to leave.
Okay, thank you. Thank you for coming. Bye-bye. And we'll have better sessions going forward. Thank you, Guhesh.
Pleasure meeting you. Happy to participate in the next time. Yeah.
Thank you.
Bye,
see you. Bye. So with Fabio's question, we have Ashwin and Samar. Please.
I'll just quickly respond to that as well. Yes. So I think from a risk standpoint, let me sort of call it out this way. There are perhaps three types of startups which have got impacted in very different ways, right? One are the pure consumer type startups. So let's say a ride sharing service, putting bikes out where there's a lot of contact involved, and very direct to consumer type of plays. They have been affected the most. Revenues dropping all the way to zero for many months. The second set are perhaps the ones which are a little bit more on the B2B2C type of startup, which is somebody lending, for example, to for a consumer play, consumer lending type of startup. And they have perhaps been impacted significantly as well, but not as much as the ones that are, a direct to consumer startup. And then the third are the enterprise startups with a little bit of a global customer base as well. And in my mind, those are the ones that have actually been affected the least. And we've been experiencing that with our portfolio as well. I think what's going to happen on risk mitigation, to answer Fabio's question, is that funds or investors who have had a large focus on the consumer space, and there are many which straddle across these three spaces, will try and rebalance their portfolio to have more of the B2B enterprise type of startups which don't get as affected. In India itself, what we've been seeing is that there has been a fairly organic sort of movement of investors to try and stay away from consumer type plays which have a very high cash burn. Look closely, not just at top line type of metrics, but even unit economics. That's been happening for a couple of years, and that has got accelerated in a sense, specifically because of COVID. And on the exit piece, what I agree with what Guhesh said. There are some opportunistic acquisitions that have come up, but these are more because there were startups that were going to wind up as a result of having to shut down and not making revenues and all of that. But I think broadly what we are seeing is some of our portfolio itself has deferred their fundraising round. And we pushed it out saying, listen, as long as you have adequate cash, don't go into the market today because you don't have that visibility into revenues to get the sort of valuations that you would want to be looking for today. So let's hold off, wait for a few months, things will bounce back, and you go and raise money from investors when you have, when you've caught up and actually generated the revenues you were supposed to in this time. And as a result, what I do expect is our exit horizon as well is going to get increased or delayed to that extent that their next round of funding is going to get delayed, and therefore it becomes a cascading effect.
Great. The V-shaped recovery that Guhesh just mentioned. Thank you so much for that. Samar, your inputs for the same question, risk appetite.
So I have a little bit of a, I agree with what Ashwin is saying, that, yes, companies which are more B2B focused, people are now more aligned towards that. But, on the risk appetite, what has happened is, conventionally things that were fairly safe, like, fixed deposits, and like just putting money in safe equities, that has also been, seen as a very risky bet. For example, like a lot of people today are pretty skeptic of all the stock market pricing, right? I mean, it just doesn't make sense that the whole global economy is almost shut down in a sense, and the stock markets are globally almost at their highest level ever. Right? So this kind of doesn't make sense. So I think a lot of people, in fact, we speak to, are also trying to see that, there is something going on with the economy, at least the financial markets, which we don't really understand. Like, there's no fundamental logic behind all this pricing. Right. So in that sense, we have actually started to look at alternative sources of, stores of value, which is, I would say startups are actually less risky right now. But yes, we are focused on companies that are actually building for the world, right? They might be based in India or any developing country, but if they are B2B and building a solution for the world, that's the kind of startups which are very lucrative right now also. Because with COVID, I think one of the big trends that would start is that, you can be sitting anywhere and selling anywhere, right? Earlier, you tend to solve local problems, and it's just a psychological factor, but it's still like, one thing. So I think it's a time of uncertainty. Like people, at least I don't understand the fundamental reason behind all the financial market boom. I think it's probably lack of options. And that has also led to some people being skeptical. In fact, some people have been started to like traditional rich people who earlier parked their funds in real estate or financial markets have been asking me, can we get into tech somehow, right? So they're very risk averse people, but they see that these traditional financial markets are actually fairly risky right now. So I don't know. I mean, that's just my view. So I'm not a very, very financial oriented person. So
you rightly mentioned that startups are the right asset class to invest in.
I mean, I don't know if it is right or wrong. I'm just saying financial markets seem to be wrong right now.
Exactly.
I don't know really.
Which means startups are less riskier asset class to invest in.
I mean, relatively, yes. That's my opinion, right? I mean, a few people I talk to are pretty like wary of all the financial markets right now.
Right.
I don't know. What do you guys think? Ashwin, like, what do you think about the financial markets right now? Fabio? You're mute.
Yeah, no, here I am. On the financial market, I mean, we can discuss the matter for hours, but as a first approximation, my explanation is rather simple. There is a market player with infinite resources,
Mhm.
called Federal Reserve, or in general, central bank. This market player has become de facto a monopolist with infinite resources. And it stated, I will inject as much money as needed, QE infinite. And I will make sure that the markets will not drop. The market indices will not drop. And the Federal Reserve, the US Federal Reserve, started with credit markets, junk bonds, you know? And then when that was not enough, they announced that they would be buying ETFs, equity ETFs. At that point, the message to all market participants was clear. There is only one direction for the equity prices to go. That direction is up. Those, and were a lot, who had built short positions got massacred, so they learned a lesson.
Yeah.
And everybody understood that they could not battle
Yeah.
somebody with infinite resources, and they draw the, the logical conclusions. And now the only game that market participants can play is to determine what is a satisfactory level for the Federal Reserve to keep the main stock indices. Other than you don't look at fundamentals, you don't look at price equity ratio, you don't look at liquidity, you don't look at anything. You look at what the Fed preferences are.
Insights coming from economist. Samar, did that answer your question?
Yeah, but to be honest, it makes me more scared. I mean, that's like completely against the free market.
Like, on with the wind, you're right, but tomorrow is another day. The Fed is focusing on the current...
Isn't that completely against capitalism? I mean, that's not what capitalism is.
We have witnessed a Sovietization of financial markets, but the use or the justification for this is, an epochal emergency. It's an unprecedented crisis, driven not by economic fundamentals, but by a sanitary crisis. So we have to adopt unprecedented means to fight off the consequences and make sure that the financial markets don't melt down. So what will happen tomorrow, we'll think about it tomorrow. That's the attitude of monetary authorities and government. As an economist, I can tell you that this is a piling up. This constitutes a piling up of debt, and that must be repaid. That will always be repaid, either by the debtor, either by the creditors, one way or the other, either with growth, So, but this is something, the consequences of what's going on now will be clearer, I would say, in 18 months. That's when the real
reality will come out.
Will knock on the door and say, "Here I am."
Can I have a minute to make a couple of comments? Do I, Sunny?
Yeah.
So couple of things here, right? Which is one, I think we should stop thinking about, and a few people have realized that the stock market is a parameter for the economy, at least in India, right? Where neither the economy is at a very mature level, neither is the stock market, right? As it is in the Western world. So we need to stop seeing the stock market as a parameter of the economy. The second part is individuals going into, or is it becoming risky for, is the financial markets becoming too risky? I think what's happening is actually the other way around. And we must differentiate between what's happening in the US with what's happening in India. There's a lot of liquidity that has come about because of the state or the Feds, as far as the US is concerned, right? But we haven't pumped in India as much money, into the economy as a central bank or as a government. And what has also happened is in the first 4 months of the year, a lot of foreign institutional investment money actually went out of the Indian stock markets in a big way. Some of it has started coming back, but what is really fueled, if you ask me, the rally in the Indian stock markets is actually retail investors.
Right.
Domestic investors as well as retail investors in a big way. So people are actually individuals who didn't earlier invest in the stock markets have suddenly said somewhere in the middle of the whole COVID situation 2 or 3 months back said, listen, this valuation of these markets is so low that let's get in. And now that they've got in, they're continuing to participate, even though the valuation levels have gone up. And I think this happened in the US as well, that you had a lot of retail investors coming to the market, but that was a little bit more because of the infusion of liquidity by the government.
The Fed.
Yeah, by the Fed itself, right? So here it's a slightly different dynamic. I think it's valuation driven rather than liquidity.
Right. I think
and startups are never, as a VC fund manager, startups are not a risk averse class, a very highly risky asset class. So for people who are looking to invest, they should know what they're doing. People who burnt their fingers multiple times over, we know it's a very, very challenging asset class to handle. I mean, you hear about the successes, you tend to hear less about the failures as far as startups.
Failures, yeah, that's true.
So very different perspectives. I mean, someone did the answer. You should be investing in stock as per Ashwin, especially in India.
No, I don't think so. I don't know if that means that. I think I should be staying away from stocks.
You should be staying with Bitcoin. I think that seems to bring you a lot of comfort. So that may be the one for you.
And to be honest, I just don't care about anything and focus on your work. That's it.
Honestly, Bitcoin is the most, cryptocurrencies or Bitcoin, people consider as a risky investment because of the volatility. But I don't understand the psychology, but you've already proven that you do make investments in risky asset classes.
I generally say like either very, very risky or just completely safe. So, don't be in the midway, just be on extreme, divide the assets in like the extreme classes. I don't know. I don't want to say anything in front of an economist. He'll think this guy is stupid. So.
No. So that brings us to the end of the session. Before we go offline.
Thanks a lot, guys.
No, I want to know about your feedback because you came here, attended our show, spoke in our show for the first time. What's your feedback about this? Because we're going to curate this as a content. We're going to put it across on our social media as well. So just give us a feedback about it. What do you think about the VCTV?
So for me, it was pretty informative. I learned quite a few things, and it was great to connect with with actual people who invest full time. So I'm like I spend less than 10% of my time investing, but I want to learn about this. I want to be more informed in the space. So that's why it's a good place for me to learn and hopefully connect with people with shared interests.
Great.
So thanks a lot.
Thank you, Samar, because we're going to, after the show, we're going to send you a link of the replay as well. Please circulate it among the network, and
sure.
People who like to share their insights, just like you. We have panels running from Monday to Friday on different topics, very interesting topics. Okay. I learn every day. And I honestly, since the last few months that I've been hosting the show, my knowledge has gone from here to here. Across the industries. So I love it.
You want to
do you have an open position for a host? You also want to learn as much.
Of course, I'm a team in the region. So please, definitely, say, Ashwin, ping me after this. We can cover India market together. So tell me, because you said you want to host, what are your feedback about the VCTV?
No, I think it's fantastic. I think two things, right? Of course, you get to talk to people, especially in today's world where we're not traveling anymore, right? You're getting to meet people, not just within India, but even from a global standpoint, get other perspectives. And therefore, there is a lot of learning in, getting all those perspectives on a specific, something that's happening right now in front of us. And I think this makes up a lot, therefore, for our inability to travel. And therefore, while you said 6:30, it just made sense for me to hang on for another 25 minutes in terms of the close time, just to hear what other people have to say on the various topics.
Thank you. Thank you. I really love that. I mean, I will definitely connect with
Sure.
after this. The whole point is this replay would be distributed to all the speakers today. Please spread it across your network. We would like to have more and more people viewing us because this is very. Fabio, what are your feedback? Like, what do you think about the VCTV?
First of all, that it has a wonderful host. So we're all very fond of your style, your competence, and your smile. So no, I think it's very important because it brings together different perspectives from different parts of the world, and it underlines that there is a lot of talent, a lot of competencies, a lot of initiatives all over the world. That VC is not only Silicon Valley and the US or a few other ecosystems around the world. It's a much broader phenomenon that can spring out from locations which would not normally come to mind when speaking about innovation. For example, I'm following companies in Qatar, which are, very, very interesting. And in the UAE as well, there is a thriving VC scene. So this is important, and I think that we should strive to build a community. So the TV should be the catalyst for a worldwide community of like-minded people who want to, first of all, have information, but second and maybe most importantly, want to know where to look for opportunities in terms of investors, and on the other side, in terms of opportunities. So it's important that this space, the VC space, becomes a global ecosystem where the network and the opportunity can be accessed easily. And in this sense, your initiative is very laudable and extremely crucial in building up this project.
Excellent. Thank you, Fabio, for those last words. I thoroughly enjoy hosting shows because I learn a lot and I sleep very well. Trust me. And I would like all of you to enjoy the shows because we have panelists from all over the world. We cover US as well, Europe as well, and we cover a lot of topics. You can watch us on www.latoken.com/events. And your profiles are now up on our website. You can check yourself up on our website at www.latoken/profiles. Please spread the word, as I said, because it's very crucial. As Fabio said, we have to build a community. We want to come together because this is an online virtual world that we live in, and we want to build a community which COVID has made possible in a way. I would say all the global countries coming together. So this brings us to the end of the show. I would like to say thank you very much. We are way over time. Thank you very much for your time. Those of you are here, Ashwin, Fabio, and Samar. So please stay safe because we would like to have you again on our panel. We would like to expand this VCTV to other regions as well, as Ashwin said. And I'm going to connect with you. Please stay connected, stay safe, and good evening from me from Singapore.
Thank you very much, guys.
Thank you.
Thanks, everyone.
See you all.
Very
Bye-bye.
nice to learn from you guys.